ready to unlock homeownership yet, that the hurdles are just too high, you may be shortchanging yourself. Many of the things renters believe about home buying are myths. I'm Jenn Zapacosta with Red Cedar Real Estate, and I'd love for you to hear the real deal on mortgage myths. I have to put 20% down. Saving 20% of the price of a home in many places isn't just a challenge, it's a roadblock. And it's not a must-do. In fact, the median down payment for first-time homebuyers is 7%. How can you become part of the less than 20 club? FHA loans. The Federal Housing Association, or FHA, is an old friend to first-time homebuyers, those who are ready to become homebuyers with less than 20% down. If you qualify, you may be able to get a loan with as little as 3.5%. The Maryland Mortgage Program. Mortgage Program is a state agency-sponsored down payment assistance program that helps prospective homebuyers in different ways. VA, USDA, and Navy Federal Credit Union loans are three government-related lenders who offer mortgages with as little as zero down. The VA is for veterans and family members. The USDA is for buying in qualifying areas, typically rural, and the Navy Federal is for military and government. 16% of buyers ask friends or relatives to help jumpstart their home ownership with a gift. Talk to your lender first, though. There may be limits to the amount of gifted funds they'll accept, and they may require your benefactor to sign some paperwork. My low credit score means I can't buy a home, so your credit isn't great. That doesn't mean you have to forego your home buying dreams. Here are some options for those with less than stellar credit. With a credit score of 500, you can apply for an FHA loan, but you'll need 10% down to offset the risk. If your score is a tick better, 580, you can participate in their down payment assistance program, which requires only 3.5% down. On the off chance you have enough cash on hand to put down more than 20%, the higher down payment can help those with lower credit scores because they would be considered less risky for lenders. Find someone with a better credit score to co-sign the loan, but understand that if you don't make the payments, the co-signer will be financially responsible and their credit will also suffer. Check your credit report. Maybe your credit isn't that low after all. Order a copy of your report from all three reporting agencies, Equifax, TransUnion, and Experian. If you find inaccurate or old information, ask the agencies to correct it. I can't afford agent commissions. Typically, the commission is paid from the proceeds of the sale via the seller. This is one of the many reasons to connect with a buyer's agent. The seller's agent doesn't work for you, and you need a pro in your corner. My bank will give me the best mortgage. There are a lot of positive things to say about working with your local bank, but assuming they'll give you the best mortgage is a mistake. Banks are only one type of home loan lender. Others include credit unions and mortgage companies. Mortgage rates aren't the same across the board, so contact several institutions to ensure you're getting the best price. Or if you prefer to let the lenders come to you, consider getting a loan through a mortgage broker. Brokers have access to several lenders and they'll shop their market, getting you a wider selection of loans. But unless you contract with one, they aren't obligated to get the best deal for you. So you'll want to shop around for a broker, just as you would a lender. I was pre-approved. I got the loan. Well, no. Don't order that couch from West Elm or unpack your tax documents just yet. You don't get the loan until A, the seller accepts your offer, B, the lender approves the loan, which you'll need those tax documents for, C, you sign the loan papers. Between A and C, the lender will have the home appraised to assure the value is in line with the purchase price, check your credit again, and ask for more documents than you ever knew existed. What does pre-approval mean for a loan? It tells sellers you're eligible for a loan, and it shows them you're serious. This gives them confidence in your offer, increasing your chances of A, B, and C actually happening. A low interest rate is important, but it's not the only thing to consider. When shopping around for a loan, check the APR, annual percentage rate. It includes all loan costs, such as origination and processing fees, that can vary widely from lender to lender, in addition to the interest rate. One loan may have a low interest rate, but the upfront fees cost more than you'd save in interest. The APR lets you compare apples to apples. I will be discussing APR and what it means for you in another video blog. Before you sign the loan, your lender will give you a loan estimate, a line-by-line estimate of fees. You can find your APR there. You may be closer to home ownership than you thought. Thank you. And if you find this information helpful, or if you know someone who could benefit, I'd love it if you would share.